Hello and welcome back to Ensuring Success 2021. This is the second session for day 2. And I can tell you right now, if you have a client who's been impacted by COVID programs. So we're going to talk about the tax implications of those programs and kind of what's still on the table with those as we're winding down 2021. But first, before we do that, I want to spend just a moment thanking our sponsors for ensuring success. We would not be here without all of our sponsors, who include ADP, Ace Cloud Hosting, CPA Charge, Avalara, BotKeeper, ComplyRight, CorePay1, CoreV, CPA.com, eFile for Biz, Intuit, QX Global Group, Right Networks, SafeSend Returns, Sage, SureLink, TaxFile, Vic AI, Wolters Kluwer, and Xero. And we particularly want to thank TaxFile, who is sponsoring this particular session. Before we move into the session topic, I want to just explain for those of you who are just joining us how CPE and CE credit work for this session. So if you are planning to collect CPE or CE credit for this session, we will display 3 codes randomly during the session. I'll call attention to them. They'll appear on the bottom of your screen. You'll need to write down or somehow record those codes. Each one is a 3-digit number. At the end of the day, or at the end of this session, or the end of next month, or whenever you decide to collect CPE credits for this session, you'll go back to ensuringsuccess.com and click on the button, or on the top of the menu bar where it says Get CPE/CE Credit. At that point, you'll enter the email address you used to register for this event, and you'll be able to then enter the codes you collected for every session you attended and download your CPE certificates. So be sure to keep track of the codes as we give them. As I mentioned, we want to thank TaxFile, who is sponsoring this session. In addition, about within a week after the event ends, you'll be getting an email message from CPA Practice Advisor. Keep an eye out for that. It will have information and offers from all of the sponsors for this event. We're calling it our digital tote bag, so we want to make sure that you look out for that in the week ahead. Also, all our sessions will be available online at ensuringsuccess.com after we get them uploaded after the event's over, which is going to take about a week or so. So you can, if you want to share sessions later, you can certainly do that. Okay, so right now, I'd like to introduce our speakers, and I'm going to have them give you all brief introductions to themselves, and then we'll get started with the session. So I'm going to start right next to me with Amie. Let's hear about you, Amie.
I'm Amie Coldwell Breslow. I'm from Washington, D.C. I'm a tax attorney at Jones Day.
Thanks.
Hi, I'm Justin Watkins from Miami, Florida, and I'm with TaxFile.
Okay, Jackie.
Hi, I'm Jackie Meyer at Meyer Tax Consulting, certified concierge accountant and tax plan IQ.
And I'm Alexandra DeFelice, Director of Marketing and Business Development for Payne and Fears Law Firm in Southern California and co-moderator for Today with Gail Perry.
Excellent. Thanks so much. As I said, if you've got clients, you've probably got clients who've been impacted by the various programs that our government generously offered during the last year and a half, almost coming up on 2 years. So what we'd like to do is take a look at a lot of those programs and talk about brief summary of what those programs are, what's still on the table, what are we looking at as we approach the end of the year, meeting with our clients or having an opportunity to contact them before year end to make sure that any potential tax ramifications are at least being acknowledged, and make sure that we're ready for wrapping up tax returns for year 2021, and also financial statements that may be impacted by some of the results of these programs. So let's start with something that impacted almost everybody, and that's the economic impact payments, or the stimulus checks that we received 3 times during the whole COVID situation. And some clients are incomed out of receiving those payments, but there are lots who received the payments or who didn't receive the payments and should have. Where are we with the stimulus payment program, and what do our attendees need to know? Jackie, let's start with you.
Okay, sure. Well, I have a few tips, I guess. So, round 1 was back in 2020 for $600. Round 2 was late 2020. And then round 3 was around March 12th for $1,400. And that includes both parents and any dependents, no matter what age, I believe, which
For
is
the third one, right?
Yeah, for that third one, which is pretty interesting. And if you overpaid based on them calculating it on 2019 return, you do not have to repay it. So that's a really, really key and important fact. We are encouraging that clients run their own transcripts before we file their 2021 returns to reconcile all of this, or have the accountant actually run the transcripts themselves. And then there's a letter, 6475, that is supposed to reconcile all of the information. So we might want to wait for that before we file returns as well.
Okay, two things. The transcripts for 2019 or?
Well, all the years,
Okay.
yeah. I mean, pretty much every year, get an engagement letter, have the accountant run the transcript retrieval if they can, and if not, then ask the client to do it instead.
Okay, and the letter you mentioned, that's an IRS letter?
Yes, an IRS letter that we're supposed to get. So we'll see if it actually happens or not.
Okay, and what's going to be in that letter?
It's supposed to just reconcile what was actually sent so that the accountant doesn't have the burden. But we don't know if that's actually going to happen or not. So fingers crossed.
Okay. Other comments on the stimulus payments, what we're looking for?
Yeah, well, the stimulus payments are somewhat of a tricky thing. So in 2020, those two payments were picked up on that tax return, but in 2021, there's still that third payment that's still left. So it's also important to realize, the timing of everything. It might be a little bit confusing, but many taxpayers received their second stimulus payment in 2021, but it actually fell into the 2020 tax return filing. So it's important to remember that it's just the third stimulus payment that we're worrying about in 2021.
Okay.
And in addition to that, obviously, it's very important for firms to be very clear with their clients to make sure that they reconcile those payments, because the IRS is definitely sending notices for differences, or they're adjusting tax return filings for, if they claim they didn't receive a check, let's say, they're adjusting the accounts to potentially cause the taxpayer to owe or reducing refunds for this difference. So it's very, very important that, that accountants are requesting transcripts so that we have a solid idea as to what the client should have received from the IRS.
Okay. So if a client may or may not have received payment, or as far as the IRS is concerned, they received payment, but they tell their accountant, I didn't receive my payment, and the accountant puts it on the tax return, that's where we're really running into a problem?
Correct.
Okay. And Amie, what are you seeing on these?
On the stimulus payments, quite often what I'm seeing feedback from is whether how do you apply for it, or if they didn't get it, like what sort of recourse do you have, particularly where the IRS believes that you did receive the payment, but if you either were supposed to receive a hard check because you didn't have direct deposit, or if there was direct deposit, did it get deposited into the right account? What sort of recourse do you have? And with something like that, it's just, it can get very confusing, particularly for folks who don't necessarily have an accountant on staff. And so, and calling the IRS helpline doesn't necessarily help you. Right. And so,
Picking up the phone at this point?
it's been a while since I've called the IRS for anything, but I did manage, for something completely unrelated to COVID, to get somebody on the phone after about a 2-hour wait. So,
yeah, and that's the practitioner line, right? That's supposed to be direct line.
I think one of my team, it was 3 hours yesterday, so I was impressed.
Yeah. And Jackie, when we say that there's a letter coming out, is the letter coming out, is it from the IRS side? Like, what is like the form? Like, where could you find that? Like, where would you find the letter?
Yeah, that's what I hear, but I don't know any more details of that. So, I'm assuming it's going to be mailed out, but I don't know. So to be determined.
Yeah.
Mm-hmm. One thing I'm hearing is a lot is from couples who divorced or separated during COVID, and one person, the main taxpayer on the tax return, got the payment for the whole couple, for both, and especially if it was direct deposited. And what's the recourse for the newly divorced spouse who is disconnected from that payment?
Super mess, right?
Yeah.
I think before we ask them that, did we need to take a quick break?
Yeah, let's take a quick break. We're going to show the first CPE. We're not going to break away, but I just want to show the first CPE code on the bottom of our screen. So make note of this if you're planning on collecting either CPE or CE credit for this session. Write down this code or take a screenshot so you'll have a record of it. So I just want to hit that one more time. If you've got a divorced couple and one spouse comes to you and says, my spouse took the whole stimulus payments, both halves, and I want you to file on my return so I can get my half back. That's not going to work, is it? If the IRS has already paid the couple the full payment.
Yeah, it's you might actually have better success dealing with it with your divorce attorney. Yeah. If I'm allowed, hopefully I'm allowed to say that in this session. But
yeah, absolutely.
Yeah, let's defer that to the divorce attorney because we're all kind of like wide-eyed. I don't know about you, Judson, but I don't have a great answer for that.
The IRS actually, I've looked at these transcripts, and they actually do track it per spouse now. Okay. So you'd actually have to pull the transcripts of both spouses to see, for example, the $1,200 on each side having been received, assuming they qualified for the full amount.
Okay.
So they're doing better with that.
Excellent. Okay, that's good to hear. All right, let's move on to the advanced child tax credit because that's been causing a lot of issues, especially with higher income individuals. So. First of all, are we seeing any situations of you recommending to your clients that they decline the credit, or are they going to have to repay the credit? Is everybody getting the credit who's supposed to be getting it? What if you're married versus single parent? How's this all working?
That's a lot of questions.
Yeah, it is. Just going to let you run with that. What can you tell us about the advanced child tax credit?
Okay, well, I do know that divorced couples is becoming an issue for that one for sure. Them both actually receiving the full credit or half of the credit amount is what they're supposed to receive in the advance, and so that's something to definitely watch out for.
What do you do with that?
I don't know.
We love all the guidance that we're getting from the government.
I know. It's like, I don't know, and I hate to say that, but I don't have a good answer for you. I do know that it's reconciled on the 2021 return. We know that we get $3,600 for age 5 and under. We get $3,000 for age 6 to 17, and then it starts reducing once your income goes between $150,000 to $400,000. And I don't know if everyone's getting it. I haven't gotten it. My income is under that threshold, and I have not received anything, but I'm not too concerned about it. So I don't know about everybody else.
Because you'll be able to reconcile it on the return.
Yeah, exactly. And as of now, they will want that to be reconciled and repaid, so to speak. It's not going to be you overpaid, don't pay us back. Or we overpaid you, don't pay us back. But we'll see if they maybe change that guidance.
Yeah, and on the child care credit, it's one of the proposals in the Build Back Better plan is to extend that through 2022. And so that's one area where the issues that we're seeing today are not just going to die today. It could be extended if Build Back Better is passed before January 1st of 2022, or even if it gets passed next year and they do extend it through the end of the year. And it's one of those items where you could see that it's come up during COVID, it definitely benefits working families in general. So, I think there's a question out there about whether it's something that, if it's extended to 2022, do you continue to keep on extending it in order to, to help families? Because it's a great program. I personally am not, to get advantage of the child tax credit. So, but I do know that, we've looked at it. And it's one of those areas, as Jackie had said, that if you overpaid or overreceived, you're going to have to pay it back. The other issue that we see is as children go between the ages. I think the cutoff age was 6. So if you have a child who is, during the year goes from 6 to 7, what amount are you supposed to get, for that year? And like, that's a question. I don't know if either of you have had opportunity to kind of have to grapple with that question of, is your child 6 or is your child 7, when they change age during the year?
Oh gosh, well, I think I would just assume it's the same as every other age bracket with IRS, which means whatever you are as of the end of the year. Yeah. But I don't know if people are going to try to do otherwise. But I say we need to do some tax planning, Amie, to get your threshold under that 400. We'll talk later.
I didn't say my threshold is under that. I do not. I just said I have not taken advantage of it. Could be that I don't have a child.
Oh, that's true. That's true. Okay.
So going back to the economic impact payments, we did have a question from the audience. They said, what do you do if the IRS says the taxpayer received the EIP, but they actually didn't? Is there a form that they can file to dispute it? Justin, do you?
I haven't had that situation personally. If obviously you have to then get with the client and then determine, okay, well, did you actually receive it? If it's determined that the IRS says they sent it, then what you can do is you can contact them and they can actually run a trace on a check that's been sent out. And then that will help kind of determine, okay, well, what happened? Does it need to be replaced? So that's some troubleshooting that you have to unfortunately get on the phone and get with an agent and try to work that out.
Back to the phone, yeah. So, and actually with both the stimulus payments and the child tax credit, what about situations where taxpayers technically should qualify for one or both of those, but they haven't filed tax returns for a few years?
They're out of luck. They have to file their 2019 return at least, and then 2020, if their 2019 didn't qualify, they'd want to definitely file their 2020. Mm-hmm. And there is a letter actually for the advanced child credit as well. It's letter 6419 that's supposed to reconcile that one as well. So we'll see if that happens.
Okay. So people should be looking for those letters in the mail
and maybe
at some
not
point.
even file returns as the accountant, not even file returns until you receive the letter, depending on if it's actually going to get issued in time or not.
Yeah, who knows?
And that actually comes up, the non-filing of a tax return for younger adults who didn't have a filing obligation, and then 2020 rolled around, and they want to get the credit, but they can't because they don't have a tax return for the prior year. Mm-hmm. And at the very beginning of when those payments were coming out, there was a question of whether do you just file a return based on either zero income because you weren't working because you were still in school, or do you have to, if you haven't historically filed tax returns because your income was below the limit, do you go back and file those returns? And in some instances, I've seen folks, file tax returns for prior years in order to get the stimulus payment.
Also, going back to something Justin said about when y'all were talking about not receiving the payments, I know one of the two, if not both, there's like a debit card that the IRS is issuing. Yes. And so the clients will say, oh, we didn't get anything. And then the accountant's like, are you sure? And then they're like, what about a debit card? And they're like, oh, that debit card.
It's like junk mail or something and throw it away.
Yeah. So you have to be really careful with being very specific with the taxpayers on that.
Yes.
Okay, a lot of the programs were related to businesses, but before we jump to the business programs, there's one other place I'd like to go, and that's unemployment compensation, which also impacts individual taxpayers. So what we saw was, and this is of course state by state, making rules about who qualifies for unemployment and for how long and how much they get and what the circumstances are. But at the end of the day, when we're talking about federal tax returns, how did all of the COVID-related or not, I mean, you didn't have to have lost your job because of COVID, but how did all the unemployment issues that came out during 2020 and 2021, how did those flow through tax returns, and what do we want to be on the lookout for?
Well, we've got the $10,200 that's tax exempt, so to speak, on their 2020
federal level, right?
Federal return. Yes, and that's, I believe, if you make up to $150,000 in AGI.
Yeah, less than 150.
Less than 150.
I don't know if both of you have seen this, but I know friends who own small businesses. One of the issues that they've grappled with all along is that they don't get a W-2, and so how do you prove lost wages when you own the business? And that's been like, a big sticking point with collecting, some of these amounts, particularly like, unemployment, because, you would generally show like, whether what your W-2 was, you'd get a letter from your employer saying, your job has been eliminated, but you own the business. So it's, it's not like I guess you can send a letter to yourself, but I'm not sure that would work. But but I don't know if either of you, if that issue has come up in your practices.
I do remember it a little bit. I think I've kind of blocked out half this stuff since it happened in 2020 because I'm like, oh yeah, that did happen, didn't it? And being in Texas, there were a lot of people that were filing for unemployment that were self-employed, and they were receiving the funds. And then I recall, I host a Facebook group called Accounting Firm Influencers, which I would love for everyone to join, and Gail's in there. But I recall people saying that letters were coming stating that people had to repay the unemployment in certain states. Do you remember anything like that?
I do. Obviously, the other part, not to change subjects, but the other part of that is if you were a self-employed individual, you had the option to apply for PPP loan funds versus getting the unemployment compensation, because obviously as a sole proprietor, you're not technically unemployed. You're self-employed. So I can see where that's the reason why they were getting the letters.
And aren't we still looking at a situation where, people who were really efficient and on top of things filed their tax returns for 2020 early in 2021, and then of course this became a retroactive ruling that up to $10,200 of unemployment was no longer taxable. And before the IRS even said anything else about it, really efficient accountants who were on the ball were filing for refunds for their clients, amending their returns so that they could take the federal tax away from that. And then the IRS comes back and says, oh, you don't have to file the returns, we'll take care of it. And then now it's December 2021 and the IRS is still behind on a third of those returns haven't been processed yet or something like that. So what's your advice to those people if your client's in that situation where you didn't file an amended return to get their the tax back that was paid on unemployment, they haven't received their reimbursement yet from the IRS. We're going into 2021 tax returns. What are they going to do? Do you just wait, or do you try and reconcile on their 2021 return, or what are we going to do about that?
That's a good question.
This is Stump the Panel.
No. I do believe that some of it is on a case-by-case basis, because there's so many different fact patterns that it's, and people are in so many different situations, and some of it is very state-specific, that it's hard to just have one, rule of thumb other than call your accountant, is just to come up with well, this is what you should do, because what applies to one family or one taxpayer is not necessarily going to apply to another family or taxpayer.
Yeah, I mean, I could see how you would take that debate to the individual level and be like, well, do we go ahead and amend or just wait? And to me, I would think leaning towards just waiting, but I don't know.
Well, the IRS would definitely not want you to amend. They're so backed up with the amended returns that they would definitely prefer that you didn't do that. Obviously, you can send letter correspondence, but that obviously takes time too. So it's unfortunately, it's a waiting game, to my knowledge.
Okay. And we just got a message from one of our participants who said to use IRS Form 3911, asking for a refund if you're confident you did not receive the stimulus payment and the IRS says you did. So that's an option that's out there, I suppose.
Repeat that form number again.
Form 3911, which is an IRS request for refund. I don't know if it's for particular situations or what. Anyway. All right, taxpayer statement regarding refund. So, that's what they suggest. One of our attendees is suggesting that's what you should file if you're in that situation where, no, I didn't receive it. Yes, I think you did. Okay, we're going to take a quick break right here, just for a very short word from our sponsor, TaxFile, and then when we come back, we will present you with the second CPE code for this session, so don't go away.
TaxFile helps CPAs like you find quality staff at a moment's notice. You can access our network of thousands of CPAs through our easy-to-use software platform. Here's how it works. You fill out a quick form that tells TaxFile about the return you want help with. With those answers, TaxFile searches our network to find the best CPA for your project. You'll meet your TaxFile CPA via chat and help them get up to speed on the project. Our platform has thousands of CPAs that work with a wide variety of different tax software. You'll get real-time notifications every time your CPA reaches a milestone and can send feedback right through the web or your mobile device. TaxFile helps you scale quickly, find qualified staff, and spend more face time with your clients. Learn more about how TaxFile can help your business today.
Welcome back. Please check the bottom of your screen for the second CPE code for this session. So if you're planning on claiming CPE or CE credit for this session, use this or save this code, and then you'll go back to ensuringsuccess.com later and enter your codes for all your sessions to download your CPE certificates. We will be submitting the information to the IRS for the CE credits. So I'd like to hop over to the business part of some of the programs that have come out that were COVID related. Let's talk about the Payment Protection Program. It came out in several parts. It impacted a lot of businesses and gave businesses who employ people opportunities to ideally not have to let their people go during COVID, or at least get some relief. So could we have first kind of a quick summary of what that PPP program entailed and who was impacted by it?
The PPP program was obviously, it came out in two parts, but basically what it did is it was supposed to be a stimulus basically for businesses that would be able to, cover 2.5 months of their payroll. Essentially was the purpose of the legislation, and it allowed businesses to receive that money tax-free, and then through several pieces of legislation they would also be able to deduct the expenses paid with the funds used from the funds they received. So it was kind of a double benefit for some businesses. It was actually great. So it worked out very well for them. And then obviously that happened in 2020 and then in 2021 as well. So there was a second payment that was given out. Obviously after you receive the funds, you have to track the expenses. The minimum was that you had to have when you receive the funds, it was 60% had to be payroll expenses of the funds that were received. And there was a 24-week period in which those funds had to be used before the forgiveness application could be submitted and then, for approval. So that's
and then another 10 months, right, before you actually have to submit the forgiveness application.
Correct.
Yeah. Okay.
And one thing that I see coming up quite often when I get questions on it is tracing and tracing the funds. And many businesses are not set up. Your cash is fungible, and they're not set up to necessarily trace funds. And the record keeping for the Payroll Protection Program is record keeping you need to keep for any other type of record keeping for taxes. And so being able to substantiate that the 60% payroll, the 24 weeks is critical, and it's often ensure that whatever programs you use, you're able to produce that document, because when the IRS or anyone else comes in to ask about it, you're going to need to trace it, and going back is never easy.
Mm-hmm. Right. Yeah. So one other thing to note: if the PPP was applied for and received in 2020, the forgiveness application should have already been submitted. And I was watching an AICPA town hall just from this week, which those are great, by the way. And they said that 95% of the forgiveness applications are in for 2020. So that's pretty cool.
So there were some issues about how this was all going to flow through financial statements, which ultimately flow through tax returns. Can you guys elaborate on some of the concerns and issues that came out of that?
Oh, there's good news on that one. There's flexibility from the IRS. So you can either recognize the forgiveness in 2020 when the expenses were incurred, or you can wait until forgiveness in 2021. And the good news for accountants and taxpayers is that everyone was all over the place with that. And so now we can just stick with what we chose to do at a firm level or at an individual level and be okay with it.
And what about deductibility of the expenses used that were reimbursed by the PPP program? I think expenses that were incurred. So deductibility of your payroll when you've been basically paid back for that. How did that all work out?
My understanding is from a financial statement perspective, you could either have left those expenses in your general administrative expenses on the financials, or you could have netted it with the proceeds received from the PPP loans
So it's a
from
choice.
the SBA. So that, to my understanding, there was flexibility with that in terms of presentation.
Okay, and then related to that is the ERC program. So how did that tie into, you've got payment protection program and now you've got employee retention credit. How did that work?
So the two programs are, I will say, they're maybe not compatible. You can't double dip. You can't both claim the same pocket of payroll that you claimed that you paid PPP. You cannot then use that same pocket of payroll for the ERC for the credit. And that was, I don't believe that was necessarily clear up front when it was enacted. And so it goes back to that tracing and why tracing and record keeping is so integral with these programs. And then in addition to that, there are other programs that are outside of COVID that are not compatible with the ERC or the payroll protection either. And so, if you can't triple dip. And so, again, it goes back to record keeping and really being able to substantiate, what you used each program for. And where I see, companies getting in trouble is that they, without realizing it, they did double dip. And when I say without realizing it, it was, you have a payroll expense, you look at your payroll expense, but didn't actually, bifurcate the payroll expense, because payroll is it's typically not bifurcated. I don't know if you all have seen something similar or.
Obviously, that becomes a challenge, right? You can't double dip. So, I mean, the easier part would have been to segregate the other expenses that were not factored into the 60, right? Which is the rent, the utilities, and so forth. So, I mean, that part would have been a little bit easier. So, as long as you were, like you were saying, bifurcating, making sure that you're segregating the expenses. I'm not sure how other people's clients have done it, but I've actually seen where a company that I worked with actually created a separate bank account to track it, just for their ease, and that worked really well, and it was seamless for the accountant.
We could go back in time and tell everybody to do it this way.
Yeah, I know. Just to kind of clarify, between ERC and PPP was tax-exempt income. That was finalized. ERC actually does reduce your payroll expense deduction, right? And so it is essentially taxable in its own way. I wanted to make sure that was clear because I wasn't sure if we had said that well with PPP earlier. And we know that ERC is done for pretty much, right? So September 30th, the latest infrastructure bill says that ERC is no longer applicable and people might still be trying to get it. And so they need to actually fix that. And there's a couple different ways to do that. If they took it as a 7,200 advance payment on the 7,200 form, they have to repay by the due date of the next 941 return for no penalties. If they reduce their payroll deposits, they have to repay by December 20th for failure of deposit penalties. And otherwise, there might be reasonable cause penalty relief available as well.
And I know it's not embedded in these two programs, but it's also related to employment, was the deferral of employment taxes. Post, and I forget the date, if it was March 21st, 2020, and those payroll taxes having to be repaid 50% at the end of this year, 50% at the end of next year, those payroll taxes could not actually be deducted on your 2020 return unless you paid them on or before, and I may get the date wrong here. I think it's like 9.5 months or 8.5 months under the recurring expense exemption. And so I know there were a lot of companies that either made the payment, by the due date in 2021 to have it go back to their 2020 tax return, or may have, because it is an expense, may have deducted it inadvertently on their 2020 tax return and not having paid those taxes. And so just the due date for 50% for those who did take advantage of that benefit, the first due date for 50% is December 31st of this year, and it's outside of what your normal payroll, and so there could be you don't want to miss that. Is really, and so, and that's also wrapped up in this whole payroll protection and ERC. It's just one more thing that's like coming up, and that has not been extended, and I'm not hearing that it would be extended. So.
Yeah. I kind of selfishly want to poll the audience about who's actually received, if they've been amending the 941s, because we started doing that in June, and we've yet to have a client actually receive a check from the IRS for ERC. Have y'all?
No.
Okay,
No.
So they've been saying it'd be 6 months, so now it's looking like maybe 9 months. I don't know if the audience wants to give us.
So what's the question exactly? I just have to type it
If
in
they've
here.
seen clients actually receiving the ERC check from the IRS.
Okay.
Yeah.
Okay, we'll put that out to them, and while we're putting that poll together, and we'll get it up on your screen momentarily. You're mentioning the fact that for some of these programs, people need to provide proof of how their the money they received was actually used. What are we talking about in terms of that proof? Do we need some audited statements? Do we just take the word of somebody who fills out a piece of paper that says, here's how I used my money? Or what advice can we give to people who are getting ready to talk to their clients about how they can substantiate the use of the funds they received?
I mean,
Okay,
I wouldn't.
and that poll is up now for anybody that would like
perfect.
to
Yay.
share their insights.
I wouldn't think audited statements would be required. There was a point in my career when I worked, in the government, and I was not an auditor, but worked as a technical expert for the audit teams. And it's you want sufficient documentation that can establish what you used it for. And so, what is that documentation? It's the forms 941, which shows what payroll you had, what is in your books and records. What you don't want to have is like a box of receipts and papers. You want it to be organized, and even a very, I would say, simple Excel spreadsheet, which shows, this is the amount I received, this I used, my payroll for this period, was this amount. It represents 60% of, if you're in the payroll protection program, it was during this period. And, the backup to that would be the 941s. The backup to that would be, if you use a third-party vendor, the third-party vendor is going to be able to run, your payroll for that period. And so, I think that at least from my viewpoint, if you can substantiate it like that, I don't see a reason to go out and get audited financial statements.
Yeah, I think also though, if you did get PPP and you're doing ERC, I would highly encourage taxpayers to use us accountants, right? Because you need to make sure that you're allocating appropriately between those two. I can't remember the CPE that one of my team took recently, but there's a really cool Excel workbooks. We're such Excel dorks, but it really helps allocate that out really well. But I guess viewers can join Accounting Firm Influencers on Facebook if we can post it there once I figure out what that is.
Okay, so I have the poll results, and I do have several questions that came in that I'd like to share. So let's see here. The poll results are: have your clients received an ERC check from the IRS? 29% yes, 44% no, and 25% unsure. And then someone else wrote in they're seeing about 9 months.
Okay.
So that's interesting. So here's some of the questions that are coming in now. They're all related. A lot of them are related to ERC. You said ERC refunds are taxable, but not for not-for-profit organizations. Is that correct?
I don't know the answer to that because I don't work with nonprofits. So.
Yeah, off the top of my head, I don't know the answer to that either.
Okay. The next question is, if you need to amend the 2020 return due to ERC, will there be a penalty on the amount that is now owed?
If it's under payment, it would probably be penalized, and then the question is as to the reasonable cause, whether you have reasonable cause to argue it.
And it's my understanding that during this whole COVID situation, the IRS is pretty open to listening to reasonable cause arguments.
Yeah.
Okay, the next question. If I have amended a 941 from 2020 for ERC, is it required to amend the filed 2020 business return to reduce the payroll expenses?
Say that again.
If I have amended a 941 from 2020 for ERC, is it required to amend the filed 2020 business return to reduce the payroll expenses?
That's a good question. I don't know the answer, and I probably should. I wish I had my team with me right now to help me out.
Okay.
My gut would be yes.
You would think it's yes because it has to reduce their taxable payroll. I don't know if there will be any kind of provision from the IRS for people to somehow claim it on 2021, but I haven't heard anything like that.
One way or another, they need to report it.
Yeah.
Okay, and then regarding the not-for-profits, an attendee did say that ERC is not taxable to not-for-profits.
Cool.
Next one, how does a self-employed person who defers payroll taxes pay back the deferral by 12/31?
How do they send in the money?
It says, how do they pay back the deferral?
Oh, pay back the deferral. I'm not sure the answer to that. I would go to the IRS website.
Yeah, payback.
Send some money to the IRS.
Send some money. I would, off the top of my head, I would suspect that, absent looking at the IRS and seeing if there's a special form that you would make the payment with the form that you would typically make your self-employment tax payments with, whatever the appropriate form is.
I think if you filed your 2020 return and took the deferral and decided you don't want the deferral, just go back and amend the 2020.
I'm sorry. I thought they were asking how do they pay the money to the government for it, as opposed to.
It sounded like that the way that it was worded.
Yes.
Yeah.
Okay. Sorry. Apologies.
Okay. That is how it sounded, but I think the easiest way to do it is amend the 2020.
Yes.
So, Gail, I think we have a CPE break.
We do. We're going to take one more quick break to hear another message from our sponsor, TaxFile, and when we come back, we'll give you the third CPE code for this session, so don't go away.
I feel like TaxFile gave me back my purpose. We send them the projects I don't have time for. And they send us updates in real time as they work through each project. It's a game changer. I can give my client relationships the face time they deserve.
Welcome back. If you look at the bottom of your screen, we are displaying the third and final CPE code for this session. That's CPE/CE. So if you're planning on claiming education credit under either the CPE program or IRS CE program, record this code. And then when you go back to insuringsuccess.com to get your credit, you'll enter the three codes that you received during this session and any other sessions you've attended. And then you can download your CPE credit certificates, and we will be filing your CE credit information with the IRS. Okay, one thing we haven't talked about yet is the Eidl Program. So let's just have a brief summary of how that worked, the grants as well as the loans and the second loans if you applied for relief a second time, and when repayments start, taxability, do you put this on your financial statement as a loan payable? And is there anything you need to report on your tax returns?
Okay, lots of questions there again, but we'll try to make our way through them. So initially we had the EIDL advance of $10,000, which became tax exempt income.
And that was a max 10,000, right?
Yes, that was. And so then we went into our normal EIDL loans, which have been around, I believe. And what's really interesting is they've been expanded recently to where I'm recommending that clients that maybe don't have reduction in their gross receipts are still apply for them if they have outstanding debt that they want to pay off, because there's no requirement that you have to have a reduction in sales. It actually adds the last couple years of your sales to calculate what kind of loan amount you can get. And up to $200,000 of loan value, there's no personal guarantee at 3.75%. So it's kind of a win-win situation if you have a client. Now, you cannot use the proceeds towards expanding operations, whatever that means, right? So like new marketing efforts or a new building, or I don't know, maybe a new building would even work if it was part of something you were already planning on doing. But it really, really makes this a nice liberal provision to take advantage of for the clients.
And it's a 10-year repayment plan, correct?
It's 30.
It's 30, sorry.
Yeah, 30 years.
So because it's 30 years, the monthly payment is so low that it just makes so much sense.
Right. Is it 325 or 375%?
3.75.
Yeah.
Yeah.
Okay. So yeah, this program has saved the life for some of my clients who were especially some self-employed people who were completely out of work during COVID. And the thing that disappoints me really about this program more than any of the others, but also the payroll program to a certain extent and the ERC, that the marketing for these programs has been very limited. So unless you're, as a small business person, unless you're working with an accountant who knows about this stuff, you don't even necessarily know that these funds are available or how to get them.
Right.
And to be able to advise a client on the availability of these funds that are like Eidl still out there, it makes such a difference in their lives.
Yeah.
So be the good guy.
Yeah, for sure. And I believe the Eidl is ending December 31st.
Yes.
So you do have to get that in this year.
Yeah.
You have to have less than 500 employees, or there's a couple other provisions that you can work around. And then you have 36 months to spend the money. And that recently was extended to be able to prepay principal loan debt, which makes it really a liberal provision.
Yeah, great program.
So we did have a comment from the audience regarding that 941 question.
Okay.
If you want to hear, I love when people help from the audience. It's great. It says the answer is the business regarding the question about 941 for ERC and if business return needs to be amended for 2020. The business return must be amended to reduce the wage expense in the year that the wages were used for ERC. IRS will not allow shift to 2021.
Okay, perfect. Thank you so much.
Thank you, guys.
Thank you.
Excellent. And just another briefing on the Eidl. How do people report that? Anything that has to flow through the tax return or their financial statements, how do they do it?
Well, it's a normal loan, so other than that advance component, right? So you have your deductible interest expense, but otherwise it would be treated as a typical loan.
And the advance, how is that treated?
Well, it becomes tax exempt, so you can have a tax exempt line item on your P&L if you wanted to for that.
As I recall, they asked you to report it, or at least the software. I don't know if it showed up in the returns, but I remember software asking you to report if you had received an advance. But it's not taxable. And the interest is deductible, correct?
Yes.
Yes.
Oh, and then there are still targeted EIDL loans available. So if you're in certain address or zip codes, you can still actually apply to get more of that advance. I just for kicks looked myself up the other day, and it's like 2 miles east of where I live. But I do want people to know that that's available, because if people are struggling, you do have to show, I think, a reduction of like 50% of sales. But if you're in that bucket, you want to take advantage of that provision.
And where do you find out if you're in an eligible program area?
On the SBA website. Yeah, they have a whole map locator, so it's really easy to use.
Okay.
And Gail, when you're talking about, how do things flow up on financial statements or tax returns, we've all focused on the entity itself being taxable, but if you operate through an S corporation or a partnership, which many small businesses do, all of this, tax exempt income and what's taxable, what has to get repaid, all of those are going to result in adjustments, to your basis, which is how, losses are going to flow through. So you want to make sure that, if you're, that what software you're using or working with your accountant, that you let them know this. Because, one thing we were seeing is that with respect to companies that had, significant losses in 2020, there was tax exempt income which didn't actually maybe come up until 2021. Those losses could not flow through in order to get picked up on the individual return because the tax exempt income which would have given them the additional basis they needed was not there. And so, as you're talking to your accountant, it's very important to think about not just how it affects the business, but you individually as well if you operate through, some sort of a joint venture.
Excellent. Great information. Any other final comments? We're about to wrap up this session. Anything else about these COVID-related programs that you want to?
Well, I will say I compiled a pretty detailed Excel spreadsheet or Google document on these revisions. Yeah. So if the audience wants access to that, you can either go through the Facebook group and ask, or go down to the bottom of my website, taxplaniq.com, go to the bottom and submit to receive the form, and then you'll get instant access to the Google Sheet.
And just repeat that Facebook group one more time, please. We had a question about that.
Sure, it's accounting firm influencers.
Great.
Yeah.
Thank you.
No
I'm
problem.
looking at that spreadsheet, and that's been my guide as we're talking.
Yay!
It's been really good.
Great job.
Sure.
All right. Well, thank you all so much. Outstanding panel. So much good information. We really hope that as you wind down the year and talk with your clients, that this will help in your conversations to help you ask the right questions and help them get what they need in terms of programs that are still available and the proper tax treatment related to all these programs. Thank you, TaxFile, for making this session possible, sponsoring us. And we will see you again at the top of the hour. I think we are going to talk about mergers and acquisitions and how that process affects your firm culture. So don't go away. We'll be back in a few minutes at the top of the hour.